USD, and I'm going to tell you my reasons for sell buyers on GBP USD. So let's start with the daily time frame. Let's see how yesterday can be closed. Um, let's see. I think it was bullish yesterday. Okay, yesterday was bullish. Now you can see this pattern we have here. You can see this pattern here. This pattern looks like an engulfing pattern, and you see that price is currently at the resistance level, right? After the close of this bearish candle, this candle looks like an engulfing candle. The resistance was created, and price just tested that resistance level. You can see also after the formation of that bearish pattern, if you go down to lower time frame, I'm sure a fair value gap was created. Let's see 1 hour. I'm sure a fair value gap was created on 1 hour. So you can see on 1 hour we had a fair value gap there. This is why I think GBP USD will sell. You can see this fair value gap. This is the gap between the low of this candle and the high of this candle. And you can see that gap has been filled now. You can see what is happening at the moment. You can see that gap has been filled. The gap in between the low of this candle and the high of this candle has been filled. And after price filled that gap, what candlestick pattern formed here? This is a doji, which indicates change in trend. You can see this is a doji indicating change in trend. So if the current 1 hour candle, this candle will close by 11. Okay, if it closes bearish, then you should expect more bearish move. But you don't have to wait for this bearish candle to close. You can actually take a sell now, okay, and set your stop loss 50 pips above this high, maybe 15 pips above this high. Okay, so what we have here is a bearish setup on GBP USD, and if you sell GBP USD, there is a high probability they will come for the lows here. These are areas of liquidity, this relative equal low and this low. A lot of retail traders would have executed buy after the formation of this hammer. And where would they have their stop loss? Their stop loss would be at this low. This is where they have their stop loss. Also, many traders would have executed buy after the formation of this pattern. This is a bullish reversal pattern. And where would they have their stop losses? Their stop losses would be at this low. At the beginning of the week, I told you my bias for GBP USD is bullish. For today's market, you should consider selling. Okay, you should consider selling. I think GBP is likely going to sell before NFP. It's likely going to sell before NFP. NFP will be released tomorrow. So, if you're considering buying GBP wait for the liquidity, sell side liquidity to be cleared before you buy. I hope that is clear. They're going to use NFP to clear all this sell side liquidity before going bullish. So that's my take on GBP As you can see, since the open of the market this week, you can see that GBP there has been in a range. You can see it has been in a range, and that's because of NFP. NFP. So after NFP is released tomorrow, they will get a clear direction on GBP My bias on GBP still remains bullish. If there's no opportunity to buy GBP tomorrow, then next week one would go for a buy. I hope that is clear. So that's my take on GBP Okay. Mr. Very safe. Look at Australian dollar USD. Okay, gold, GBP. Okay, let's start with Australian dollar USD. Let's look at Australian dollar USD. Okay, so let's start with daily. The daily time frame. Let's see how yesterday candle close, because that's what will determine our direction for today. Okay, so yesterday strongly bearish liquidity residing at this previous low was cleared. The liquidity residing at this previous low was cleared yesterday, and at the moment AUD USD bullish. Yeah, my bias for AUD USD this week is bullish. Okay, my bias is bullish, but the trend is not clear yet. It's not clear yet. I think Australian USD will still sell before going bullish. It will still sell. That's my take on Australian dollar USD. So what's playing out here on Australian dollar USD? Liquidity got cleared. After liquidity got cleared yesterday, look at the pattern we have here. This is engulfing pattern. This is an engulfing pattern, okay? And a lot of retail traders would have executed buy, and their stop losses will be residing at this low or this low. This is an area of liquidity. Also, I think A fair value gap was created after this engulfing pattern formed. Let's go down to 1 hour, 15 minutes to identify a fair value gap. Okay, so you can see this fair value gap that was created. Okay, so I want to see price fill this gap. Okay, this is my take on Australian USD. You can see this gap has not been filled. So I want to see price fill this gap. So the pattern that forms after this gap gets filled will determine if I'll go bullish. So for example, if a 1 hour candle or 4 hour candle breaks out from this fair value gap, then there's a high probability they will come for this liquidity. So the pattern that forms after this gap gets filled. If a bullish reversal pattern forms after this gap gets filled, then I'll buy Australian dollar USD. Okay, but if price breaks out from this fair value gap, they are coming for this low, then I'll have to wait for this low to be cleared, wait for a bullish reversal pattern to form before I will buy. So based on the pattern we have here on the daily 4 hour and 1 hour time frame, Australian dollar USD is still bearish. As you can see, what played out here, liquidity residing at this high has been cleared. You can see this high. Okay, the liquidity beside at this high has been cleared. If you also go back here, you'd see we had a support here, a support which became a resistance. So you could call this your supply zone, you could call it your resistance zone. And after price tested that resistance zone, what pattern do you have there? This is a bearish reversal pattern, and this formed during the London session, the Q zone period. You can see. So that is a sell. So if you are selling Australian dollar USD, okay, it's a good sell at the moment. If you're selling, your stop loss to be few pips above this high. Okay, if the 4 hour candle closes above this zone, then you expect more bullish move on Australian dollar USD. If a 4 hour candle closes above this zone, so your stop loss should be 10, 15 pips above this high, 10, 15 pips above this high. Okay, then your first TP, okay, be about 30 pips. First TP should be 30 pips. So if your first TP is 30 pips, your risk must not your risk shouldn't exceed 30 pips also. That's 1 to 1. Your risk should not exceed 30 pips. So you can use 25 pips or 20 pips as your stop loss. 20 pips is okay. And your first target, okay, should be 30 pips. At 30 pips, if the market goes in your direction, you've made profit of 30 pips, you can exit, close 70% of whatever profit you've made on that trade, close it. Then, see, that's why it's important to have good capital in your trading account. You don't have up to 300 or $400. If you're trading with, let's say, $50 or $100, you can only use 0.01. And when you're using 0.01, you cannot close partial profits. That's why you need good capital so that you can be able to trade more volume. So at least if you are trading with 0.02 lot size, for you to trade 0.02 lot size, at least you should have close to $300 in your account, or minimum of $200 in your account. So that every trade you take, it's very important that you close partials. Then you leave the remaining one to run to trend changes. Okay, so that's my take on Australian dollar USD. Let's look at GBPJPY. GBPJPY is bearish, still holding sells on GBPJPY after closing. If you want to take a trade now, you can take a trade on GBPJPY, a sell trade on GBPJPY. Let's start with the daily time frame. So this is the daily time frame. What happened yesterday? What happened yesterday on GBPJPY? It's clear. You can see what played out yesterday. Yesterday, price tested the resistance level. Can you see this resistance level? Can you see that? Price tested that resistance level and there's a strong rejection from that area, from that zone. Okay, you can see price tested that area and let's go down to also I think there's a fair value gap here. A fair value gap was created after price broke out from this support. Let's confirm that on lower time frame. Let's go to daily. The fair value gap was created and that could also be the reason for the pullback. Okay, so okay, you can see the fair value gap that was created here. This is the fair value gap. And you see this gap in between this low and this high. So price just they didn't fill the gap entirely. Then we had the resistance here also. You can see this resistance. You can see this resistance. So you can see this is zone also. This is a resistance zone. You can see, so price tested that level. You can see the price has is kind of ranging, has been in a range, kind of, right? So there's a breakout. We had a support that was created here. The previous 4 hour candle closed below this low. So this is a bear setup as far as I'm concerned. This is a bear setup. Now, after this bullish move, we have fair value gaps that was created. Let's see after the formation of this pattern here. And fair value gap was created. Let's see 1 hour. Though the long-term trend for GBJPY is bullish, it is bullish. But I want to see price come back and fail and come through this fair value gap. Where do we have the fair value gap here? Where do we have the fair value gap here? Okay, I expect price to pull back to say, okay, we have one here. This could be your first target. If you want to sell GBJPY, this would be your first target. Okay, this would be your first target. Now, after this candle, this is an hammer candle, right? It broke out from this resistance. A lot of retail traders would have expected trade. This is a breakout strategy, right? For those who trade breakouts from resistance. So many would have expected what to buy. Where would they have their stop loss? Stop loss would be at this low. Okay, stop loss would be at this low. So there is a high probability to come for this SL here. And also a lot of retail traders would have expected buy after the formation of this pattern. So their stop losses would be at this level. And below the low of this candle, you can see we have a fair value gap. You can see we have a fair value gap. So there is a high probability they will come. So if you are selling BBJPY from the current market price, which I think is a good price, okay, your target should be this level. So you can set it in between. Okay, this is 109. So if your target is 109 pips, the risk if you take on this trade should not exceed 60 pips. 60 pips. Okay, so your stop loss should be 2 pips above this level. This is about 49. So that will be 11 pips above. So you can set your stop loss at 60 pips, 60 pips, while you aim for 100 and something, what's it called, CP. Okay, so that's my take on GBPJPY. If you want to take a trade on GBPJPY, it should be a sell. And if a 4 hour candle breaks out from this high, then you would expect more bullish move on GBPJPY. But at the moment, GBPJPY is still bearish. It is still bearish. I hope that is clear. Okay, which other pair do you want us to look at? Let me know in the comment section. We've looked at the Australian dollar USD. USD also could be bearish because I think it's positively with GBP JPY. I think it's positively correlated with GBP JPY. Okay. Hello, babe. I will call you back. I'm in a class. I will call you back. I'm in a class. I'll call you back. You forgot your cable, right? Just drop me a message on WhatsApp. I'll call you back in 2 minutes, please. I'll bring it. Okay, so gold. Okay, we'll look at gold. We'll look at gold. Gold has been in a range for some time. It's been in a range for some time. Please, if you don't have up to $500 in your account, please don't trade gold. Gold will gold you. Gold will gold you because the risk on gold is very high. If you're taking a trade on gold, your stop loss should be about at least 70 pips. 70 pips. And if you have, let's say, $100 in your account and you are trading gold, 7 pips, 70 pips. If you're trading with 0.01, that is, if the trade goes against you, that is 70%, 7% risk on your $100. You understand? And that could mess up with your psychology. It could mess up with your psychology. So, and if you're trading with 0.02, if the trade goes against you, that's $14, which is 14% of your $100. It will mess up with your psychology. But if you're trading with, let's say, $500 and you're taking a risk of let's say 70 pips, and you're trading with 0.02, that's just $14. $14 of 500, that's about 2 or 3%. Yeah, close to 3 point something percent of $500, which is still okay. Which is still okay. But when you are losing 7% on a trade, it will affect your psychology. So that's it on DVDPY. Let's look at USDPY. Like I said, it's still the same bias. Okay, my bias on USDPY is still bearish. Okay, it's still bearish. Let's start with the daily time. You can see the same pattern now. You can see this is what we had on GBPJPY. Price tested the resistance level. You can see that tested the resistance level rejection from that area. Okay, also if you go down to lower time frame and check the value gap was created, let's go to 1 hour. The fair value gap was created after that pattern. You can see this fair value gap that was created here. We also have a fair value gap here. Price already paid this fair value gap, and you can see the pattern that formed after the gap got filled. You can see the pattern that formed after the gap got filled. That is an angry man. You can see that is an angry man. A lot of people will just jump in and start selling after price filled that gap. No, you should wait for a very reversal pattern to form before you sell. Before you sell. So my take on USDPY, my bias on USDPY long term is bullish. It's bullish, but I want to see price. There's a fair value gap that was created here. Price should come fill this gap for going bullish. That's my take on USD I'm going to take any risk on USD be a sell, though the best entry for sell on USD would have been this would have been the best price to sell, either this level or this level. If you are sold from this point, by now you should be out of this trade. This is about 130, 141 pips, and your stop loss, if you are sold from this point, your stop loss, you would have set your stop loss, let's say 50 pips above this level. So your risk on this trade would have been 50 pips, and you would have made how many pips here? 142 pips. You should be out of the trade by now. Though your target is here, by now you should be out of the trade. If at all you still want to hold on to that trade, you should have closed 70 to 80% of the profit you've made on this trade. Are you getting me? So this is not the best price to sell, because if you are selling from the current market price, okay, your stop loss will still be at this level, 118 pips, by 120 pips, and you are targeting this area. So your risk is higher than the reward. So it won't make sense. It won't make sense. Are you getting me? So for me, though it's still bearish. You could wait for a bearish reversal pattern to form on 1 hour or 4 hour before you sell. Okay, so let's assume this candlestick closes as the spine up. I decide to sell. I can just set my stop loss maybe few pips above this high. As you can see, there's a fair value gap here. So this pullback will just be to fill this fair value gap. So let's wait for this candle to close. Okay, if a bearish reversal pattern close after this gap gets filled, then one can sell and you can set your stop loss few pips above this high instead of this. You can say, okay, if 4 hour candle closes above this high, okay, above this resistance, you would exit the trade. Are you getting me? So you have to set your stop loss 20 pips or 15 pips above this high. You don't set your stop loss at this level because price might just test this level before, pulling back. You understand? So if you set your stop loss at this level, price test that level, you'll be kicked out. You'll be kicked out. So that's why I always advise that you set your stop loss few pips above the high of the candle or few pips above the low of the candle so that your SL will not be used as liquidity. I hope that is clear. So that's my take on USD2. I also sell this area, this zone. Sell. Wait for a bearish reversal pattern to form. You've already missed this first move. So if you wait for a bearish reversal pattern to form before you sell, that's my take on USD JPY. I hope that is clear. I hope that is clear. I hope that is clear. Are you still here? Are you still here? So that's it for USD Then let's look at gold. And okay, look at USD Okay, so I think gold will be the last instrument we'll be looking at. We've looked at every other pair. So gold will be the last instrument we'll be looking at. So let's look at gold. You can see gold has been in a range. Gold is waiting for NFT data. Gold is waiting for NFT data. I would not advise that you trade gold right now. I wouldn't advise that you trade gold. You can see since the market opened, gold has been playing with some traders' emotions. You can see messing up with traders' emotions. You know. So it's been in a range. The trend is not clear yet on gold, but let's see long-term trend. Let's see long-term trend on gold. Okay, I think gold is still going to sell. Okay, I believe after the formation of this pattern that looks like an engulfing pattern, The fair value gap was created on the daily, let's see daily. So you can see this fair value gap. So it's likely gold is going to come through this gap before going bullish. Okay, gold is likely going to come and fill this gap. As you can see, a lot of retail traders would have executed buy. Okay, a lot of retail traders would have executed buy, and they would have their stop losses at this low, this low, this low. So there are a lot of SL stop losses inside at this low. So there is a high probability gold will come through this fair value gap before going bullish. So if you're considering buying gold, wait for price to fill this gap. This is where you should be considering buying gold after this liquidity is cleared. This is where you should be considering buying gold. Okay, let's go down to 4 hour. So what do we have on 4 hour? You can see on 4 hour. So gold is bearish at the moment. You can see on 4 hour, a fair value gap was created. Can you see this fair value gap that was created on 4 hour? And you can see price has tested that level several times. It has tested that level several times, and there is strong rejection from that area. You can see it. So let's go down to 1 hour. Okay, so you can see. Let's use 1 hour fair value gap. You can see this is the fair value gap on 1 hour, and price has tested that level. That gap has been filled. You can see. So right now it's a sell. If you want to take any risk on gold, it's a sell. And if you are selling, the stop loss should be far above, let's say 20 pips or 30 pips above this high. That's where you set your stop loss. So let's calculate the risk involved. This is about above 200 if I'm not wrong. It should be above 200. So your stop loss should be, let's say 160 pips. That's where you set your stop loss. If that risk is not too much for you, then you can take it. Okay. Ensure you apply the right lot size on the trade. Okay. So that is it. At the moment, if I'm to take any trade on gold, it has to be a sell and not a buy. I would only consider buying if price breaks out from this resistance zone or this fair value gap. Okay, that is the time I would only consider buying gold. But at the moment, what I see on gold is a sell. It's going to clear all this liquidity, all the sell side liquidity. It's going to clear them before going bullish. I hope that is clear. Any question? Any question? Any question? If you have any question, let me know. I think we've covered everything that needs to be covered in today's session. Any question? All right, all right, all right. Later tonight, I think I'll be having a session, and in that session, I'll be teaching resistance and support. Okay, in the previous session, I taught you guys how to use candlestick. Okay, if you've not seen that video, go to my YouTube channel. You'll find the video there, how to trade with candlestick pattern. And in today's class, by 9 p.m., I'll be teaching resistance and support, and I'll teach you how to combine both strategies, how to use both strategies, support and resistance, and also candlestick pattern. And I'll talk on risk management when trading with candlestick and resistance and support. You have to set your stop losses and take profits. Hopefully by 9 p.m. I will drop the link on the WhatsApp and also Telegram group. Okay, so you're welcome, Mr. Makinwa. Mrs. Omi. Thank you, thank you, thank you, thank you. All right, so that'll be all for today's session. Hopefully, we'll meet tonight by 9 p.m. I wish you all a profitable trading day. Please ensure you apply good risk and money management. Ensure you use stop losses on all your trade. Never hope. Hope is the reason most people have crashed their accounts. It is the reason most people have crashed their accounts. You know that this trade is not going to go in your direction. You are in huge loss. Take that loss. Don't hope that the market will reverse. Don't hope that the market will reverse. You yourself know that this trade, it has changed direction. It's not going your way. Exit the trade. Don't hope. If you hope, you will catch that your account will crash. Before you enter the trade, you've already identified where you would exit the trade. For example, I have a trade on GBP. What's USD? Okay. This is the people I'm selling now. Like I said, once 4 hour, anything that makes 4 hour candle close above this high, I'm exiting the trade. Once 4 hour candle close above this high, I'm exiting the trade. I wouldn't remove my stop loss. No, hoping that it will reverse, it will reverse. No. So once markets hit your SL or is going against you, you know that this market is, man, don't remove your stop loss. Take that loss. Take that loss. Okay. Get cold water, drink or cold drink, relax. Then wait for the next opportunity. Okay. All right. All right. So that'll be all.
Thank you, sir.
You have a wonderful day.
You too.
Bye for now.
Thank you. All right.